How to invest during an inflationary recession, i.e. stagflation. How to invest during an inflationary recession. What I've done in this video is I've put together a whole bunch of clips from recent interviews that Jim Rogers has done. And then at the end of the video, we'll have a look at which asset classes perform best during an inflationary recession, and in particular, an asset class that I'm investing in right now. So with that, let's cut to the video.
So where else are you looking now that you think, we've kind of played the gloom and doom? And
Michelle, as I look around the world, bonds are a bubble. Bonds have never been this expensive in history. Property in many places, New Zealand, Korea, many places, property is a bubble because of low interest rates. Well, interest rates are going to go higher, so property is not a great place. Many stocks were a bubble. Samsung went up every day. Tencent went up, Many stocks were forming a bubble. It's calmed down now. But the only asset that I know that's still cheap is, commodities. Silver is down 75% from its all-time high. These things are very, very cheap, and those are not bubble numbers. So, and if we're going to have inflation, which we are, if you own the things that go up in price, when there's inflation, you make money. And by definition, commodities go up when there's inflation.
I do want to get into that inflationary environment in a bit, but you've told me, speaking of alternative investments, that you don't trade in crypto. And it makes sense to me in some respects, because I understand that you say you most identify with the Austrian school of thought in economics. So perhaps there's a little element of, understanding, as you say, that regulation could be coming down the line. It might be, choking off a sort of free market there. Can you tell us a little bit about why you're not invested in crypto, what the outlook is for that?
Michelle, as I look around, a lot of people I know are investing in crypto and having fun and making money. Many have already disappeared and gone to zero. My wife invests in crypto, of all things, but I don't invest in them because the bulls say they're going to be money. And my answer to that is, if and when all our money is on our computer, it's going to be government money. It's not, when the US government says, okay, this is money now, and every government is working on crypto money, they're not going to say, this is money, but if you want to use that money, you can use that money. That's not the way bureaucrats think. That's not the way politicians think. They want control. They want to regulate everything. And so, in my view, if they're just trading vehicles, fine, have at it. And I'm not a good trader.
So the recent crypto crashes don't change your mind about, any consumer behavior that might be destabilizing, or that's not your philosophy?
Well, if things change, then I have to change too. But no, I don't see anything that's going to make me, if suddenly the euro is all denominated in cryptos, then I'll have to change. But no, I don't see that.
That we're probably entering the worst bear market of your lifetime. I've heard people ask you recently if silver is the safe haven, if gold is the safe haven, and you've responded and said, look, I don't ever want to call anything safe when it comes to investing. And so my question for you is, where do you see the least amount of risk right now? Have you allocated any cash anywhere in the last 6 months? And if so, where to?
Just to clarify slightly, what I have said is the next time we have a bear market, it's going to be the worst in my lifetime. 2008, we had a bad problem because of too much debt. Well, geez, look out the window. Since 2009, the debt has skyrocketed everywhere in the world. It's at staggering levels, which we have never seen in world history. So what I've said, the next time we have a bear market, it's going to be the worst in my lifetime because the debt is so much higher. Now, we may be entering the bear market now, and if not, probably soon. If there's peace in Ukraine, for instance, there would be a big rally. Oil will go down, grain will go down, and people will say, oh, everything is okay. That'll be the last rally, if it happens that way. So we're sort of getting towards the end. We've had the longest period in American history without problems. I mean, why it could go on for 30 years? Never has, but why not? So anyway, we're getting closer, and when it happens, it's going to be very, very bad. Everybody should watch Jay Martin to learn what's going on and be prepared.
Is the Fed doing the right thing by raising rates, and how much higher do you think the Fed can raise rates before they have to pivot?
Well, Patrick, you're not old enough to remember, but in 1980, short-term government interest rates in America were over 20%. That's not a typo, 20%, because inflation was completely out of control. It was very high, and they had to take drastic actions to do something. A difference between now and then, by the way, is that then America was a creditor nation as a whole. Now we're the largest debtor nation in the history of the world. So what are they going to have to do this time? They're going to have to do a lot of things that are not going to be fun for any of us.
When the Fed does pivot, are we going to see QE once again, or might we see something else?
Well, what I suspect will happen is, because remember, these are not very smart people, Patrick. These are bureaucrats and academics. They don't know what they're doing. They're just trying to keep their jobs. But what I suspect will happen, there's a lot of pessimism around right now. Something will come, usually happens, to change that. I mean, let's suppose there's peace in Ukraine. I'm not projecting that. I'm just saying, let's suppose something like that happens. Well, that will cause grain prices to go down. It'll cause oil prices to go down. They will say everything is okay now. So they will stop having such high interest rates. They will cool off, and that'll make the markets go up a lot. But that will be the last rally, because we're coming to the end of this long, long bull market, and they have printed a lot of money. So things will go up. But then inflation will get worse and worse and worse, because there are a lot of problems in the system, including huge amounts of printed money, borrowed money, spent money. So then inflation will get worse, and then they'll have to try to do something else, and it will not be fun for anybody. Oh, yes, we haven't had a serious bear market in the U.S., for instance, for 13 years. That's the longest in American history. Now, maybe it'll go for 30 years. I don't know, but it's already the longest in American history. So no, we're certainly going to have bad economic times again. In 2008 and 2009, we had a big economic problem because of too much debt. Patrick, since then, the debt has skyrocketed. Look out the window. The debt has skyrocketed everywhere in the world. So the next economic problem is going to be the worst in my lifetime, because there's staggering amounts of debt, like has never happened in world history.
Jim, thank you so much for joining Making Money for the first time.
I'm delighted to be here, Matt. Let's figure out if we can make some money. We all need to.
Exactly. So speaking of making money, I got to jump right into it, because obviously if we Google your name right now, you obviously know what comes up. Jim Rogers predicts the worst bear market in his lifetime. Can you expand a little bit on that? And are we already in the midst of that bear market?
Well, I wouldn't bother Googling me. I'd never Google me. Well, no, Matt, in 2008, we had a problem. 2009, you remember, because of too much debt. Since then, Matt, the debt everywhere, even in China, has gone through the roof. How can the next bear market not be the worst in my lifetime? The debt is up by staggering amounts since the last one.
So let me ask you this, just to play counter argument here. A lot of people say, well, the U.S., for example, we could just keep printing money and print our way out of it. And I know that's not true. It creates inflation, which we're having now, and many other issues. But how do you counteract that argument that we could just print our way out of it because the dollar's not going anywhere?
Okay, that's wonderful. Sounds great. We don't ever have to worry again. Let's say they do that. That's going to lead to an inflationary huge boom and a huge bubble, and then that collapse will be the worst in my life. All I said was the next bear market. Yeah. I didn't say which one, whether it's an inflationary boom or a deflationary collapse. It's going to be the worst in my lifetime, because the situation has gotten much worse.
So, I also, reading up, you mentioned.
But I just want to ask you, Matt, whoever these guys are that say the next one won't be bad,
please, let's have a show with them, okay?
Yeah.
'Cause it sounds crazy.
Yeah. So, you know, if we do have that worst bear market of your lifetime, obviously you're going to see a lot of stocks potentially disappear, go down 80 or 90%. And if you have that, it usually brings down almost every sector within the market. We saw that in 2000, 2008, 2009 timeframe. Where do you see any opportunities if you believe that is on the horizon?
Well, you said we're not going to have a bear market because they're going to print a lot of money. So then you should buy the things that go up. And if they print a lot of money, it's going to be commodities. It's going to be real assets. Whenever they print a lot of money, I mean, silver does not usually go down. It does not stay down when they print a lot of money. Agriculture has been a disaster for a long time. I find that commodities, real assets, attractive now. Not buying them today, but I will be buying them again soon, probably.
Okay, good.
I mean,
yeah.
property you don't want to, well, you do because interest rates will eventually go very high, so you don't want to own property. Stocks will form a big bubble. If you can play the bubble, you'll get rich. But if you miss,
Sure.
you'll go wiped out. You know, two kinds of people do well in bubbles. One, the people who are skeptical, they get wiped out right away. And the people who believe get wiped out right away. Or not right away, but eventually.
Yeah.
So bubbles can kill people. But if you're good at it, you'll make money. But bonds are certainly a bubble. Matt, what else do you see?
Oh, I mean, you know, just to clarify, I wasn't saying I think the government should print their way out of it. I've had people argue me and tell me that's how they get out of it. So, you know, I don't think we're going to have a great bear market. I'm not saying you're wrong or I'm right. I just don't see it right now. But I agree with everything that you're saying will lead to it at some point. I just don't see it right now. So let me ask you this. You know,
Matt, I didn't say right now. I said the next.
The next. Okay, I forgot.
You know, you can, what you can do is you watch Making Money with Matt McCall, and you'll find out when it's coming. I didn't say when. I just said the next.
The next. Okay.
And maybe you're going to say we're not ever going to have a bear market again. Oh my God! You and Janet Yellen.
Are you seeing warning signs in the real estate markets?
Well, in some places, I mean, in Korea, they had a bubble. New Zealand, they had a bubble in property. That was partly because interest rates were so low. Interest rates were nothing around the world. But as interest rates have started going up, some of those bubbles have started to slow down a bit. And when interest rates get high again, it's going to destroy the property markets. It always has. You know, and if you have, well, even if you don't have debt, if your neighbors have debt, it's going to hurt their property market too.
Can you again, revisit the 70s and 80s where we experienced the stagflation, and can you share your thoughts about that period?
They're going to come again because it's even more printing money, man, more debt now than ever before, more government spending now than even then. And as I said, one difference is America was a creditor nation back in those days. Now it's the largest debtor nation in the history of the world. No, things got very, very serious. Equity markets, stock markets were a terrible place to be for a decade or so. Bonds were terrible. Everything was a terrible place to be except gold and silver and real asset, oil, real things were a great place to be. That's what happened. It's happened before in history. It will happen again, despite what the central bank in America tells you.
Yeah, so that would take us back to commodities. Do you think this war in Ukraine and the strength of commodities, the possession, the resources that countries like Russia and even China have, do you think that commodities are showing the strength that they have over a fiat currency?
Well, yes, because I mean, it's simple economics. If there's too much of something, the price goes down. And never in world history have governments printed as much money as they've been printing in recent years. So all of this gigantic amounts of paper money is going to continue to have effect, and the value of paper money is going to continue to go down.
Within commodities, which are you looking at most favorably now?
Probably agriculture, just because it's been such a disaster. But I mean, you know, I own gold and silver. I'm going to buy more of both sometime. I don't know when. It's been going down, correcting. If they correct enough, I'll buy more of both. It just depends on how the world develops. Energy
if energy comes down enough, I'll certainly buy more energy. But the market will tell me what to buy, Patrick.
So talk to me about your portfolio, Jim. Where are you exposed right now? Where are you storing wealth?
Well, as I look around the world, Jay, bonds are certainly a bubble. Bonds have never been this expensive in the history of the world, unless they're special situation bonds. Property in many countries is forming a bubble. If you go to Korea or New Zealand or many places, property is certainly forming a bubble. Not everywhere, but in many countries. Stocks were forming a bubble. I mean, Tencent went up every day. Samsung went up every day. Amazon went up every day. Not all stocks, but stocks were forming a bubble. So the only thing that I know of that's cheap, I mean, silver is down 60% from its all-time high. That doesn't mean it can't go down a lot more. I'm just saying it's not a bubble when you have an asset that's already down 60%. Sugar is down 60%. These are not bubble prices. They can get cheaper, but commodities are the only assets I know that are still somewhat cheap on a historic basis.
Now, I know you hold precious metals, Jim. You've usually got a few gold or silver coins on your desk there. Talk to me about
Here it is, silver again.
there it is. Proportions. Do you have hard lines within your portfolio? You like to have 5%, 10% exposure to precious metals or physical gold or silver?
No, I don't have any hard lines like that. I mean, I guess if I were a trust department or a major bank, I would have hard lines like that. You know, somebody would say, okay, everybody 10% in gold or whatever, 8% in technology. I don't invest that way. I'm too lazy or too simple or something. I try to find the good opportunities, whatever they are, and try to focus. Diversification is not a way to get rich. Diversification is a way that brokers can protect themselves if you want to sue them. But if you really want to, you know, Henry Ford didn't diversify. He concentrated and focused. So if you want to get rich, figure out the best basket and put all your eggs in that basket. You've got to get the right basket, Jay, or you go bankrupt pretty quickly. But that's the way to succeed as an investor. It's also a way to go bankrupt very quickly if you get it wrong.
So is your basket agriculture right now?
Well, I own lots of things. I mean, I bought Chinese shares 30 years ago, and I still own a lot of them. So I own a lot of things that I've owned for a long time, but new money right now is mainly going into mainly agriculture, yes.
Okay.
And Uzbekistan, but Uzbekistan is tiny. As you pointed out, it's a very small market.
Okay. And I believe you're right now holding a fair amount of US dollars because it's perceived by the world still, anyways, thus far, as the safe haven asset class, whether or not it is that.
I would say my US dollar position is the largest currency position, at least relative, that I've ever had, for the reasons you just said.
Interesting. Okay. Now, isn't that what makes, I mean, you could say it's not a safe haven, but people believe it is. And I ask the question, is there a difference if collectively the population believes something is a safe haven asset class? Doesn't that trust create the safety of that asset class, at least as long as the population believes it so?
Well, you said it, as long as, but when everybody goes to the same side of a boat, you better be worried about going to the other side of the boat, because they often will tip over, and eventually it does tip over. When everybody thinks the same thing, somebody's not thinking. History is pretty clear about that, whether it's war or investing or romance or whatever it happens to be. If you follow the crowd, you usually don't succeed.
I got to ask you about gold. You mentioned, physical assets and commodities. Is gold something that you believe, is it always a holding in your portfolio? Is that a long-term portion? Is it an asset class you always have exposure to?
I have some gold right here.
There you go.
I have a little gold in my pocket. You should always have a little gold in your pocket. You never know. Man, I first bought gold in 1971, I think it was. Wasn't even yet legal for Americans.
and have never sold any gold. I periodically buy it. Everybody should own gold. I'm an old peasant, and us old peasants, when the things go wrong, we want some gold under the bed.
Yeah.
We want some silver in the closet, you know. So I've got it, and I will continue to buy more and more and more, and it'll go to my children someday. And if you're really good at it, if you're good at timing, which I'm not, you can make a huge fortune if you get the bottoms of gold and silver before a big rally.
So, all right, I always ask people before I let them go one question. And if you were going to go to an island, take the family there, turn it off your phone, turn everything off for 10 years, what's the one investment that you would buy right now that you feel so comfortable in that 10 years from now, you'd put your money into it?
Well, I guess I would have to say silver, since it's so depressed. That is down 60 or 70% from its all-time high. Maybe a farmer, but I couldn't go for 10 years and not pay attention to it. But if you buy a farm, I guess I'd have to say silver. I don't know what else I could say go away and not think about for 10 years.
I mean, the common word we hear, and I think it's true kind of anywhere you go today, is inflation, right? The inflationary pressures that they are feeling. Many small businesses are able to pass that along from a pricing perspective. And I think that's been quite interesting that they haven't had any pushback from their clients yet about pricing. So pricing has been able to be passed along. And I think when you think about, to your comment about we have been doing this for a long period of time, when you look at inflation, small caps are the only asset class that have beaten inflation in every decade going back to the 1930s. So here you have an asset class that typically does quite well in inflationary times. It's obviously under pressure at the moment with the rest of the market, but it's going to be interesting to see how the rest of the decade turns out. And I do think that the pricing power that a lot of these small businesses have, and a lot of that is around this idea of them being more B2B in focus, right? So they're more built-in products into other products that are necessary pieces of the puzzle, if you will, that gives them that flexibility. And I think you're going to hear more and more about that from a lot of small businesses going forward. There's a couple of themes. I think a couple of things that we've been thinking about within the small cap space. Obviously, value versus growth, right? Value has done a little bit better here in the decline. I think from their highs, they're only down about 22%. The Russell 2000 is down around 32%, and the growth index at the most recent low is down around 42%. So you are seeing some outperformance by value over growth. I continue to believe that value is going to be one of the areas to be invested in going forward. We know that even with the movement in the markets, the value index is still much cheaper than the overall growth index. And I think that's something that we can be, pretty excited about, even in an environment where value has outperformed at least so far in the down market. So obviously, I think small cap value is an interesting place to be today. The other theme I think within small caps is high quality versus low quality, and high quality companies within the small cap space is another area that we think are very cheap. Going back over the past 20 years, we haven't seen these companies as cheap as we're seeing them today. And I think that's another area which also feeds a little bit into that value story, if you will. These better businesses is an area to invest in today. And then, the last piece of the puzzle that we get the question on an awful lot is small versus large. And I think small caps, as I mentioned or alluded to, I think they were kind of this forgotten asset class. They are selling at about a 20% discount to large caps, and it's typically a premium. We typically see small caps trade at a premium, and now we're seeing them sell at a significant discount. And it goes back to this idea that people really haven't focused on them for a period of time. They've underperformed for a period of time versus large. But I think you're in the beginning stages of what should be a small cap outperformance period.
So as you can see from this chart, the annualized returns for selected financial market and commodity assets during the 1970s. So we need to look at the 1970s to look at the last inflationary recession that we've had to see what performed well. And well, as you can see, oil, silver, gold, basically commodities did well. And as you just heard, small caps are a good inflation hedge as well. And very soon, you guys that are interested in Finance Uncut Insiders, are going to get a view of my portfolio and the investments that I've made in the energy sector, in the precious metals, and in the commodity sector in general, and in particular some wonderful small cap stocks that I have bought that have had tremendous gains, and some that I've just recently purchased which look very good as well. So stay tuned for that. Those of you who are interested in Finance Uncut Insiders, I'll talk more about that on the next video. I'm still building that platform out. Anyway, guys, if you like this video, please hit that like button. Really do appreciate it. Love to see your thoughts and opinions in the comments below. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.